All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live pre-New York session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Benny Allen. Hope everybody is doing well today on this beautiful Wednesday morning. So, as always, let's turn off all distractions, grab a pen and paper, let's take lots of notes, and let's make sure that we participate and engage. All right. He's already in. So, good morning, good morning. So let's dive over, take a look at some fundamentals, and we'll take a look at the charts. Things are kind of sideways, looking ahead to data coming out today and over the next couple of days. So take a little bit of a different path this morning. But Benny, good morning, bro.
Good morning, Ryan. How are you?
I'm doing well, bro. How about yourself?
Doing pretty good, man. Glad to be here. Fed day.
Yes, sir. Yes, sir. It should definitely be an interesting conversation today as the Fed does their thing. Anything top of mind for you, man?
No, man, nothing besides that, because that sets the pace for everybody else and all the other central banks. So, like you said, you can see the markets moving sideways, but we knew that coming into the week. The Fed's gonna talk down rate cuts probably. The possibility of rate cuts. They probably released the dot plot today, the projections for 2024 in regards to what they plan to do and how they see things in regards to the economy and how it can impact rates. So it's an important day today. We'll see what he has to say. I expect them to hold rates where they are, but it's all about the forward guidance from this point. We know that the market is going to continue to bet on earlier rate cuts. The Fed's probably going to come out and say the opposite. They're going to talk it down, and so we'll see how the market reacts after that.
Yes, sir. Yes, sir. That's my expectation as well, and that's what the reports are saying also. So cool deal. Appreciate you, bro. Couple things just to note on top of what Benny stated, right? What Benny's talking about here, Fed to temper expectations of early rate cuts. That's the expectation. But news this morning, the British economy shrank 0.3% in October from September 2023, reversing the growth from the previous 2 months and worse than market forecast of a flat reading. Services sector was the largest contributor to the fall, but production and construction also declined, right? So we're continuing to see some of that data turn over out of the UK as well. All right. Eurozone industrial output falls more than expected. Also seeing some of that turn happening in the Eurozone also. Those are the two big things. Let's go over to look at the calendar real quick, and then I want to talk about Japan. And then we'll dive in a little deeper. Excuse me. Let me refresh this. Did it refresh? 1 second. It's not giving me what I want. See what happens. There we go. That's what we need. So yesterday we had CPI for the dollar come in. The primary CPI number was a bit elevated, but the core CPI number came in at expectation, right? So that's what occurred yesterday. We also had Tankin Manufacturing Index for Japan above expectation, and the non-manufacturing index also above expectation, which we'll come back to those numbers. Excuse me. GDP, right? Talked about that. Worse than expected. Also got a slew of other data, trade balance, industrial production, manufacturing production, all below expectation, right? Then we have, well, on to later on today, right? Core PPI and PPI data for the United States, 8:30. Then FOMC meeting, which is what all eyes are on for today at 2 o'clock. So we'll keep our eyes peeled there to see what happens. So that's really the update for today. We got New Zealand GDP coming in this afternoon at 4:45 p.m. And then tonight, Australian data for employment and unemployment rate. So those things coming in later on today. But we want to take a step back to this taking manufacturing index. And this index is a level of diffusion index based on a survey of large manufacturers. Actual greater than forecast is good for the currency. Notes for folks that don't necessarily use the calendar and really dig into it, right? If you click on the folder, you can see details and explanation of what all of these things mean, right? And then additional related stories and those sorts of things. So above zero indicates improving conditions, below indicates worsening conditions. Manufacturing plays a critical role in the Japanese economy, and this survey is considered the best gauge of the industry's health due to its large sample size and respected source, right? So why traders care? It's a leading indicator of economic health. Businesses react quickly to market conditions and changes in their sentiment can be early signs of future economic activity, such as spending, hiring, and investing, right? So what does that mean, Ryan? Let's take a look at this article, right? Japan's business sentiment rises across the board. So confidence among a wide range of Japanese companies picked up in the fourth quarter, sending a positive signal to the Bank of Japan ahead of next week's policy decision. An index of sentiment among the current country's biggest manufacturers rose to 12 in December from 9 3 months earlier, a third straight gain, according to the BOJ's quarterly Tankan report. The business mood amongst the large non-manufacturing also improved to 30 from 27, exceeds economists' expectations, and setting a fresh 32-year high. A positive figure means optimists outnumber the pessimists. The data showed sentiment picking up across the board, with an index for small manufacturers rising to 1, turning positive for the first time since early 2019. The gauge for small manufacturers advanced to 14, beating the estimates. The evidence of robust corporate sentiment will come as a welcome sign for the BOJ, as it boosts the likelihood that the companies can continue to conduct large wage hikes that the central bank hopes might feed into a positive wage price cycle that would pave the way for normalizing monetary policy, right? So we've been talking about Bank of Japan and the possibilities and what's to come. And we've been talking about wage hikes and the confirmation of large companies being able to continue those wage hikes and those wage hike negotiations. This is a sign to the Bank of Japan that this can happen, right? So it's one of the data points that's going to be key in the Bank of Japan making that decision to make that change, right? So this goes into the narrative that we've been looking at with the Bank of Japan as we move into the end of the year, beginning of the year, and the potential for policy changes, right? So I wanted to make that note so that we continue to keep our eyes on this, but this is a key number that we want to continue to follow as we move through the next couple months. So I will get a full breakdown of this article, send it to you guys, all that jazz, so that you have it. I'll drop the article, but also break it down in detail as well, so that we can have a clean explanation of everything that's happening there. Questions on that article or anything fundamental, or if you guys saw anything fundamentally that you want to chat about?
No questions.
All right, cool deal. So we'll take a quick peek at the dollar just to see its sideways movement. And then what I want to do today is talk about trend lines. So here's the dollar, right? And we see we're just caught in this range here, right? Caught in this range, 50% retracement level on the 4-hour time frame, waiting on the data from today. And for the most part, this is what you're welcome, Joy. This is what the market looks like across the board, right? Getting a lot of sideways movement, not a ton of things happening, just bouncing between price ranges, waiting on data to come out. Cool. Questions on the dollar? Oh, all right. You guys cool if I do a deep dive on trend lines for a little bit? You guys cool with that? We haven't talked about them, and Kay is working through some things in the training, so I want to clarify some things, and it might also help some others that are following. So, so trend lines, right? When it comes to this pound yen. So the goal of the trend line, right? Or not the goal. What the trend line tells you is the direction, speed, and momentum. We get that, right? So when you look at trend lines from a higher time frame and work your way down to a lower time frame, what you start to see is the difference in direction in those fractal or those smaller movements as you go down in the time frame, right? So starting on the monthly time frame, looking at this chart, what we see is prices moving down, right? However, what we see, because right when drawing that trend line, right, we go to the first, we extend it out and bring it down to the first touch in the trend in which we're looking at, right? So we're looking at price moving down, and this is the first touch of that trend line there. So when we drop that trend line, what we see is this downtrend has started to change. Why has it started to change? Because the trend line has been broken, right? So when the trend line gets broken, it tells you that the direction, the speed, and the momentum of the market has shifted, right? So on a monthly time frame, yes, price is moving down. We don't have a lower high yet, right? This is a low. We have our high point here, right? And we have a lower high here, right? We don't have a lower high here yet. We don't have a swing high that's formed. We need 2 more months, this month and next month, to close lower to confirm a swing high here to give us a lower high, right? So we don't have a lower high just yet. But we know the price has been moving down, and then we see here that the trend line has been broken. Okay, so if the trend line has been broken, why 2 months? Well, we need a swing high to form, right? We need a swing high to form here on the monthly, and we don't have that yet. Make sense? Joy, you follow me there? 2 more candles. Yep, because we're on the monthly time frame here, right? So we got our high center point candle here. We need this month to close bearish, and then we need January to close bearish in order for this to be a confirmed swing high. All right. So we know on the monthly time frame the trend line has been broken, and the direction, the speed, and the momentum of the market has changed, right? So now as we move down in the time frames, we'll see the fractal indications of this change, right? Smaller waves, smaller candles, less information, right? So we know that the trend has changed on the monthly time frame. So now price is moving to the upside. So as we move down to the weekly time frame, we know, and we can see this again here on the weekly, that or where that trend line got broken. Right there, right? And we see as we zoom in, we got a break of the trend line. We got a break of the trend line, and then we got a retest of the trend line, and then price continue moving to the upside, right? So there's our break there. All right. So now as we're looking at the market, and as we continue to move down in the time frames, we want to start to shift our view because we know the direction has shifted now, right? So now we want to look at, because what we trade is reversals, right? Reversals in the market to give us opportunities to enter the trade. Okay. So in doing that, we shift that trend line because it has been broken, and we start looking. Second. And we start looking at price moving to the upside, right? Because the direction, the speed, and the momentum has shifted. So we start at our low point and we extend that trend line out like so. And we start mapping our trend lines to the upside because the direction has shifted, right? So now we are in an uptrend. And the goal again is to get the trend line as close to the highest point as possible without cutting off any wicks or bodies, right? So in this, we continue mapping those up. Boom. And then we can draw our inner trend line here on the weekly time frame, and that will come there, like so. There. Right? So we've got our trend lines through the highest point as possible without cutting off any wicks or bodies. Right? So we see here on the weekly time frame, this candle hasn't closed yet. Whoops, I'm sorry. Why didn't that change? My bad, I apologize. Weekly time frame, sorry. When we come down to the weekly time frame, let's do this again. Right, we start at the low point and we extend trend line out. Like so. Okay. And we'll take these off. There we go. All right. And so we map those trend lines to get as close to the highest point as possible without cutting off any wicks or bodies. Boom. The next touch is there. And as we zoom in, we get closer to that highest point, we see the momentum start to pick up, right? And price starts to accelerate to the upside. And as we bring this trend line through the highest point, right? This is the highest point. There's the last touch of that trend line. Boom. Right? We see we see that we got a trend line break on the weekly time frame. Right? Last week, bearish action, bearish candle, engulfing candle, break of the trend line. So that also tells us now that as we got to this high point, we're starting to get another shift in momentum, starting to get another shift in the speed and direction of the market, right? So we're in this uptrend on the weekly time frame, but price is starting to slow down and change direction, right? Be it a short-term retracement or a long-term retracement, the duration doesn't matter. What this tells us is the direction is starting to shift. Okay, so as we go down to the lower time frames, we can keep in the back of our mind, we might be looking for trades to the downside because the direction, the speed, and momentum is starting to shift on the higher time frame. Okay, so now as we go down to the daily time frame, we'll do the same thing. All right, we'll start at our lowest point and we'll work our way up. Like so. So as you see, right, each time frame is a fractal or smaller replication of the higher time frame. So you're able to see more data and you're able to see how things are starting to move. So on the higher time frame, yes, you might be in a downtrend, but on the lower time frame, you might be in an uptrend, or vice versa. On the higher time frame, you might be in an uptrend, but then as things start to change, you see those changes on the lower time frame first, and they build the data up to that higher time frame. So you'll start to see the changes on the lower time frame when you start to have changes in direction, right? So we'll extend this trend line here. Let me see. Yep. Right. So that's our next touch of the trend line there. So as we're moving up, we see that increase in momentum. Right. And we'll bring that trend line through the highest point. Like so. Right. Because we're looking at just the uptrend here. We're not looking at anything that might be moving down. We're looking at just the uptrend, and the goal is to get as close to the highest point as possible without cutting off any wicks or bodies in this uptrend, right? So in this uptrend, this is our highest point. So our goal is to get as close to this point as possible. Okay, so with this trend line, boom, there we go. And if we wanted to, we could draw one more trend line here on the daily time frame, come through this point like that. Okay, so now we see that we got a trend line break on the daily time frame coming back down. So what does that tell us as we move to lower time frames? What it tells us is the direction is changing on the lower time frames. So we're starting to get bearish action in this pound yen pair, right? So we could be potentially looking for pullbacks and continuations to the downside because a trend line has been broken, right? So now as we move down, and we can bring some of these trend lines to the lower time frames. Boom. And we'll highlight our highest point just so we keep that in focus as well. We come down to the 4-hour, right? And make some small adjustments here. Boom. Right? We see more clearly now where that trend has started to change. Okay, you follow me so far?
Absolutely. Thank you so much.
Okay.
This
You're
makes
welcome.
sense. Yeah.
You're welcome. So now on the 4-hour time frame, right? Again, the goal is to get as close to the highest point as possible without cutting off any wicks or bodies. So we bring this inner trend line up. Boom. Now this is our earliest indication. This is our earliest indication of the direction, speed, and momentum changing. It's our first trend line break. Boom. So this is, we use the trend lines as a point of confirmation for entries in our trades, right? Because we're looking for direction changes, right? So we add that to other pieces to then be able to say, direction is shifting. This is one of the confirmations that I look for a trade entry. Once that trend line gets broken in a bearish fashion, I could potentially enter that trade, right? And you can take this a step further and go down to the 1-hour time frame and get even more detail, right? So as we come down to the 1-hour, we'll come out, we'll make our adjustments. Like so. Boom. And then there like so. Boom. All right, and we'll clear these off for a second. Okay. So now what we're able to see here is more detail. Okay. Boom. And if you got really granular, there's your highest point right there. And you had price move sideways. So we would take this trend line. We take this trend line and we move it to the outermost point of that consolidation, which is there. Now, this is your first sign, consolidation, trend line break, bearish fashion. First sign that the direction, speed, and momentum of the market is changing. Boom. And then you see a pullback and you see continuation to the downside. Right? So that's how you map the trend lines from the higher time frame down to the lower time frame, and looking at the directional shifts and those fractal images as we get down to the lower time frame to identify A, when the direction changed, and B, on the lower time frame, what direction you could be looking for trade opportunities, right? So we know on the higher time frame, the direction is starting to shift to the downside. And now we see that very clearly in detail here, right? All of this information here is that monthly candle that's starting to form on the monthly time frame, right? And that second weekly candle that's forming on the weekly time frame. So what we're able to gather from this is we're starting to move to the downside. So we want to look for trade opportunities, depending on what trades you take. We want to start looking for trade opportunities, potentially to the downside, right? And so what does that look like? So what we can do is, one, we can start to map our trend lines, maybe to the downside, right? And look for retest of our trend line, like so, right? And you see price broke down, pulled back, retested that trend line, and we've stayed below that trend line, right? If you didn't take a trade entry off of the high, boom, you got a retest of the trend line. That could be an opportunity if this is part of the trade strategy to enter a trade to the downside on the retest of the trend line. One thing, right? We use the fibs and we add those on to give us additional confirmation points and entry opportunities based on direction and percentage. So what we could also do then is run our fib off of the high, boom. And if we're looking for trend continuations, then we look for deep retracements, 618 or deeper. I can remove these. We look for a 618 retracement or deeper. And we look for an entry opportunity to the downside, right? So I'll pull these trend lines off for a second. So we look for those deep retracements, right? We got our fresh AV boundary here, and we got a pullback. Here's our 618 retracement level. So we'd be looking for a price to push into this zone. And then we look for, right, an opportunity to enter the trade, additional confirmation points. What are those additional confirmation points? A trend line break, right? So yes, in this scenario, when looking for an entry opportunity on the lower time frame, you would run your trend line here. And now we're looking for an entry opportunity. We got a 618 retracement, and now we're looking for a trend line break. And if we map these trend lines through the highest point, boom. 618 retracement, we need additional confirmation. We got a trend line break with a bearish candle there. And we also have some previous resistance levels here, right? So we got two additional confirmation points, resistance levels on a daily level, and we got a trend line break. So on the close of this second candle, confirmation the trend line has been broken, we can enter that trade to the downside, which you see that dotted red line there, that small one, that's my entry. Boom. Downside. And now we look for trend continuation, right? 618 retracement. Our matching D extension is the 1618 extension, and we'll look for the market to make waves to the downside. Making its way to that 618 extension level, right? So that's how you map the trend lines all the way down to the 1 hour time frame, and then identify your entry opportunity based on trend continuation, right? Or if we want, we can go back to higher time frames and look at the 80-20 scenario and how that plays into those trend lines as well. But questions on trend lines?
That made much more sense to me because the way you explained going from the higher time frame to the lower time frame, and I was under the assumption that I had to stay in the same direction, which is why I was so confused when I was going down to the lower time frames.
Yep, absolutely. So, because what we want to do, right? We want to identify opportunities to enter trades. In order to do that, we have to identify when that direction changes and then find opportunities that meet our rules, right? So we got to flow with the market as well, right? So it's going to change depending on the time frame that you're on, right? So people say only trade in the direction of the trend, right? The trend is your friend, but that's relative to the time frame that you're on, right? So the trend can be going down on the higher time frame, but be moving up in a retracement on the lower time frame, right? So as you continue to dig into the training, you'll start to build out a trading plan, right? And you'll start to identify what time frames you want to enter your trades on. And based on that information, then you'll be able to say, okay, I'm going to drill down with my trend lines to this time frame, and I'll look for my entries on this time frame with these additional confirmation points. Does that make sense?
That makes sense. Thank you so much for taking the time to explain that.
Yeah, absolutely. Absolutely.
This is such an excellent review. Thank you so much.
You're welcome. You're welcome. Right? And so if we bounce back a bit, looking at our 80-20 scenarios, right, which we had here on the 4-hour time frame. No, not on the 4-hour time frame. Daily time frame. Let me run my fib here. And how this. Are y'all good on that? Hope it clears up. Boom. Right, so we run our fib, the Fibonacci sequence, right? We understand the market moves in waves, ABCD waves. So we look for entry opportunities based on the Fibonacci sequence to enter trades, right? And Benny phrased it as the fib is a tuxedo on the price action, right? Gives us a fancier look at what's happening and gives us opportunities to enter trade based on a systematic approach, right? So we see here with the Fibonacci sequence, we have our A and our B. So our AB boundary, we had a shallow retracement, price pushed to the upside, came just shy of this 118 level, right? Which the 80-20 sequence, shallow retracement, price pushing to this 118, 127 zone, right? Breaking that B boundary. And then we look for, right? If we're adding additional confirmation, we look for a trend line break after price pushes into that zone. Boom. Right? And so now you're able to add the Fibonacci sequence along with your trend lines to give you entry opportunities in the zones in which we trade, right? And we have a systematic approach to this, deep retracements, and our 80-20 scenario that we're able to only look at these zones to be able to enter trades in the direction that the market is moving, be it up or down, be it with the trend or against the trend in a retracement, right? So we're able to make money on the way up and the way down, and we don't have to wait for the market to just move in one direction, right? Because again, that direction is going to be relative to the time frame that you're on, right? So this is how we're able to have the systematic approach to the market, and we're able to identify trade opportunities on every time frame, on every asset class in the same way, without being subjective to, oh, I feel like the market is going to do this, or I feel like the market is going to do this. It's no, do these things show up, right? Is this an 80-20 scenario? Is this a 618 or deeper scenario? Are my additional confirmation points met, right? And we're able to remove the feeling from the scenario and sheerly look at the price action and what the market, the sign language of the market is telling us, right? So this is how we're able to have this systematic approach and as we continue to work on our mindset, right? Remove our emotion from the process and sheerly look at, did the market do these things based on the details of the methodology that we teach? Questions? Nope. All right. Benny, you got anything to add, bro?
No, sir. Excellent lesson.
Appreciate it. Appreciate it. So this is being recorded, so you can go back and rewatch this as well to get a clear understanding of those trend lines if you do have any questions or if they pop up, right? And hey, we appreciate you diving into the training and asking the questions, right? Super important, and important that you do that and continue to do that. And that's for everybody, right? Asking the questions, doing the homework so that you can really solidify this skill, right? And solidify the thought process behind the market so that you can also work to become a consistently profitable trader. All right. So that's the pound yen deep dive. All right. So we got some time left. If you guys have any pairs you want me to take a look at, drop those into the chat for me, and we can go over those and see where those are as the market continues to consolidate a bit. Pound CAD, dollar Swiss, gold. Gotcha. Let's take a look at gold. All right. Gold is still just hovering, right? Here's our trade setup on gold, still just hovering in that 118, 127 zone. We're trying to get a trend line break here, but we're still inside this consolidation zone here, right? So let's walk back a bit. Daily time frame. We know we got that spike, all-time high, push down. And now we're looking to see if we get a pullback and a continuation to the downside. Okay. This is, we'll add this daily resistance level here. Boom. All right, and it's actually probably a weekly level. Not yet. So at the close of this week, if it's bearish, that'll be a weekly resistance level, right? So we got a daily resistance level, price pushing back down. We broke this monthly level. We broke this weekly level. Boom. Okay. So now as we come down to the 4, we look at the price action. Right. And we know we got to move back down to the downside. So if we run our fib to the upside, right, there was that last move. Boom. So now do we either get another push to the upside to get to the matching D extension, right, off of a 786 retracement, or do we get a pullback and a continuation to the downside? That's yet to be seen. That'll be data driven, right? And we'll see how that plays out. So now, so back to our trend line, right? Okay, so we come back here on the 4, and we'll start this trend line here at this lowest point to save us a bit of time. All right, but boom, extend the trend line out. Boom. Trend line to the upside. Boom. All right, and we see we got a trend line break on the 4. Boom. Trend line break, price moving to the downside. So in the 1 hour time frame, we can then, right, when using the fib, price is moving down because we got a trend line break, right? So as we go down to the 1 hour time frame, we can run our fib in the downward direction because we got those trend line breaks. Direction, speed, momentum shifting. So now we can run our fib to the downside because it gives us the direction. Boom. And now this is our trade opportunity here. Looking to see if we get a fundamental catalyst to push the market back to the upside. So now we're looking for an entry or additional confirmation. Boom. There's a trend line to the downside. As close to the lowest point as possible without cutting off any wicks or bodies. Boom. There you have it. So now we're waiting to see, because this is still consolidating. It's still pushing to the side, right? They haven't been able to break that high, and this is our low. So we're waiting to see if we get a fundamental catalyst to push price in this direction to complete this 80-20 sequence. All right, so that's gold. Questions there? No? All right, cool. Dollar Swiss. There was the 80-20 that didn't play out on the 1 hour, but played out on the 4. Let's come back. This is where we are on the daily time frame, right? We're just kind of range bound a bit, right? All trying to see what the dollar is gonna do. We'll take this off for a second. Maybe. Oh, there we go. All right. So we got this daily support level here. Weren't able to break it here back in July, right? Coming back to it. We're going to see if this deep retracement, 50%, right? If we're able to break the support level, continue to the D extension, or if this range holds and we start to push back to the upside. That's the question. All right. So as we come down to the 4. Okay. Price coming to the downside here. Run our fib to the downside. There was the 80-20 scenario that played out for us there for 150-ish pips. And now again, we're just pressing sideways, right? It's just consolidating here. So not a ton happening right now. Again, just waiting on 2 o'clock, right? So as we now come back down to the 1, you see we're kind of range bound there, right? You can run a fib to the upside from here. To see what you have, you got a deep retracement on that. But again, we want to see what the data says to see if we get a push to the upside in favor of the dollar, depending on what the Fed's conversation is, or do we get that push to the downside and work our way back to this 85-530. So not a ton happening right now. Let's see. Even on your lower time frames, you're still pressing sideways there. So you may. Right. So just back and forth. Not a ton doing. Not a ton doing. So waiting to see what happens. Waiting to see what happens here. Okay. Questions? Oh, all right. Cool. Pound CAD. Let's see. We're pressing off the resistance level, coming down. This one is bouncing back and forth a bit, right? So we're coming back down to the downside. We got a weekly support level here. Okay, we'll bring that down. Daily support as well. Come down to the daily. See, we're not able to break out, right? Weekly, 2 touches at this daily level, and we're pressing back down. So not able to break out to the upside off the 382 retracement here. So this one's going to be interesting to see. Obviously, we continue to get that that negative data, or that soft data coming out of the UK, which makes sense for this to be pressing down to the downside here. Now let's see if we get some Canadian data at some point that gives us an additional catalyst to move the market a bit. As we come back, let's see what we have. Right, you see that range there, down, top. Let's run our fib off the low. Boom. Yep, not a ton doing there either. Deeper pullback. So as we come down to the 1, we're moving back down off the high. Boom. Right, so this is also kind of stuck in a range sideways, trying to figure out what is about to happen. Do we push back to the upside, or do we get a catalyst for the Canadian dollar to pick up some strength? So not a ton doing there. We definitely could continue to be range bound here. Let's see. There's your larger fib on the 1 there. I'm bearish on the pound, so my bias on this one is to the downside. Don't have a trade set up on it, but my bias is to the downside. So if something does show up, might be an opportunity to enter. But just waiting right now. I'm not in anything on this one. Do you see anything specific, Joy, that you're looking at?
I already missed it. I was looking for an entry on the 15-minute, and the pullback happened already off the B box to the 382.
Right here?
Yeah, because once you said it and I started looking, because I did do my markdown, but I'm like, oh, it's a 80-20 on the 15. But then I seen that second swing, lower low form that's forming now. I was like, nah, I don't think it's coming back. Because I didn't pay. I remember what you said the other day about that B boundary hitting at 382.
Yeah. So it's going to be interesting. Let's see what.
No, that was Benny. My bad. That was Benny.
Yeah. We talked about it yesterday too, though, because Reese asked for some clarification on it. Let's see something here, because you do it. That does look like an 80-20 there. We got some support coming in. Yeah. Right here. So let's look at that and see. That's a previous support level. Let's see what happens there, right? Because you do have some lower time frame support here, and you do have an 80-20 here, right? Because price, I don't think price got to that 382 level there. 705.06, 705.21. Yeah, so price did miss that 382 level. So potential for 80-20 opportunity here, right? It depends on how things move today, but that is a good eye on that. What I do is I'd add additional confirmation here. That's what I do, right? And if you get a trend line break or a cloud break, then you have your entry opportunity. Yep. Appreciate that, Joy.
Where you got your where's your A at?
So this
on that.
This is a smaller wave to the downside. So this one I started here. This fib sequence.
Oh, okay. Yeah. So
this is the larger fib sequence here, right?
I see why I'm messing up.
And this is just a smaller wave.
I was just taking that last leg. I see why I messed up at. Okay.
Which one are you looking at? Right here?
Yeah, I just took the immediate last leg.
Okay. Yeah, just one more over. Yeah. So add additional confirmation on that, right? But that's definitely a sub fib opportunity if we get a trend line break on that.
Okay.
Great work. So let's on our trend line. Oops. Off the high. Oh. And then we're able to come here. Next touch is there. Boom. You also got a touch there. So now we'll bring that trend line down. Boom. There we go. All right. So if we get a trend line break, we'll look for that opportunity to the upside for potential intraday opportunity. And then we'll see what happens when we get a high price. See if we get an opportunity to get short. Okay. Questions on the pound CAD? $51.68. Oh, no questions. All right. There you go. Boom. Excuse me. Cool. Aussie CAD, Euro Aussie. That Aussie CAD is interesting. So Aussie CAD, boom, right? Daily time frame, we got our deep retracement, daily resistance. We're trying to make our way to the downside. Trying to make our way. Okay. Come down to the 4. Here's our 80-20 scenario. It's slowly trekking, Reese. Slowly trekking. All right. Trend lines coming to the upside. Boom. Yeah, man. Yeah, big time emphasis on slow. All right, so we run our trend lines to the upside here, looking for that reversal. Oops. We see we got another touch here. So boom. All right. And then we run this trend line to the upside like that. And we see price move sideways through that trend line. So we'd shift that to the outer, if I can grab it. Man. To the outermost point of that consolidation, and boom. Trend line break, pull back retest, continuation down. And we got lower highs happening there. Right? Patience, 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 patience. So it's slowly making its way. This is one that I'm in. I'm in this one in all 3 of my accounts, and I'm just letting it do its thing. And once it gets to that TP level, then we'll look and see what happens from there. But that's what it is. It's slow moving. Slow moving. We'll see if we get a catalyst at some point. If we get oil to potentially take off to the upside, that could push us. I don't know that we have any. We'll see with the unemployment data tonight. That may or may not push the market, but we'll see what happens there. And not a ton of Canadian data this week. A little bit at the end. We'll see what Governor Macklem has to say on Friday, but not a ton happening. So if anything, it'll be something that happens with oil. If we see some sort of uptick in war expansion talks, that could also move oil, which then could move the Canadian dollar. And if there's unemployment data and employment data is extreme in one direction or the other, that could also move this pair as well. So we'll watch and see what happens, see if we get a catalyst to really push this. But I'm just letting it do its thing. Yeah, just letting it do its thing. Euro Aussie. Any questions on the Aussie CAD? Nope. All right. Euro Aussie. Let's see. So this one's been back and forth, right? Weekly time frame over the long term, right? We are still looking for price to get to this level. When that happens, unsure, right? Because we could still potentially see some more downward movement to get to this 158.554 level. So we'll see what happens. We got data slowing in the Eurozone. We got some mixed data coming out of Australia, held rates. So we'll watch and see what happens here. So on the daily time frame, we're pressing down, right? Got this daily support here, this range that we've been sitting in, pushed back above it. So we'll see if we continue back to the top of the range here, or if we get a breakdown and move down, right? Again, we'll see what data or what catalyst we get, but this is another one where we're kind of stuck in a range, right? So we come here to the 4, right? After the 80-20 played out, we haven't got to that 618 level yet, but you see we're just trapped right here, right? Just trapped right here. So been trapped here for a week and a half. Right? Boom. So we're stuck. So let's go down to the 1. So we can make out of it, not a ton. Right? Might have some lower time frame opportunities here. But you see, just range bound, right? So in these range bound scenarios, if you find anything, right, that meets your rules, it'll come on lower time frames. Looking at those impulsive legs. So that one played out there. So let's see. If we get a push to the upside here, right? Shallow retracement, we're just hovering at this 236 level. So if we get anything, right, if we get a push to the upside into this 118 and 127 zone, then that could give us an opportunity to get short on this. This is on the 30, right? But we need another push to the upside there. So again, right, just trapped. So we'll see what happens as the data comes out today and see if we get a catalyst in one of these directions or push into our zone to give us that opportunity. That's what you're looking at. Okay. Yep. So yeah, we'll watch that and see what happens here. See what the data gives us and if it pushes us into this zone. Right. And then we'll look for an opportunity there if we get it. All right, so that's the Euro Aussie potential opportunity on the 30 if we get a push into that 118, 127 zone. All right, so we'll watch that one as the day progresses and see if we get it, all right, and see if it's in line with the data that comes out. Questions on the Euro Aussie?
Nope.
All right. Benny, anything before I wrap it up, bro?
No, sir. You just continue to be patient, man. Big day today with the Fed later this afternoon. So I've just learned over time to kind of just sit back. You got to sit on your hands and just wait. You know,
sir.
So I'll decide what I want to do, with the charts after the fact.
After the fact.
Yeah, not trying to time positions and guess and gamble on what may happen with the market. Or just sit back and let it all play out. So that's it. Great session.
I'm in agreement. Appreciate you, bro. All right, good people. Let's see. Yes. All right, good people. We'll be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session with my awesome partner, Mr. Benny Allen. You guys have a phenomenal Wednesday. We'll get some posts in the Discord as we're closer to the news and after the news to see what happened. We'll break down that article out of Japan so we got a clear understanding of what that means in the bigger picture. And we will see you in the morning. Peace.